So let's talk a little bit about the steps for compliance for figuring non-resident or working with non-resident aliens. So we've gotten past the IRS residencies, and now we're saying these are non-resident aliens, and this is how you apply the tax and reporting rules. Again, high level. The first thing that has to be, and this is forgotten a lot, is to determine what's called an IRS sourcing. I hate the word, but the IRS uses it. It's not what you think it is, and I'll get into that when we get to it. The second item is that if you determine the person is or this activity is U.S. source, then it's the 30% withholding, and there are some other reduced rates we won't actually get into, but it's specific to different scenarios. And the third item is if there actually is an income tax treaty, they could be exempt from tax and reporting. So let's move into IRS sourcing. As I said, it's not what you think. Most people say, oh, sourcing means it's where the money originated from. It's actually different for each and every payment classification. For instance, just as an example, like fellowships, it's a combination of where the money came from and where the research happens. So it actually has to be both cases in the U.S. to be U.S. source. If either one of those is outside, it's foreign source. So, but the bottom line is, if it's determined to be foreign source based upon those rules, we don't have to report or withhold on those items. So yes, we would create no tax statement, and we don't have to withhold. And it's also important to make sure, if that's the case and we don't have to withhold, that you don't actually withhold. Our systems are a little bit limited there, so you have to make evaluations and get it in the system correctly. Let's talk a little bit about income tax treaties. Not all countries have an income tax treaty with the United States, but even if a country has a treaty, it doesn't mean that the income the person's receiving is really availed to them. If they do have an income tax treaty, and if that activity is covered by an article in the treaty, then they have to fill out an IRS form to claim the treaty. So a lot of people get confused with that. They think that, oh, if they have the treaty, we just give them the treaty. It's not the case. There has to be an IRS form to allow us, the Research Foundation, to provide that. So if you're a payment recipient and you go out and figure out that you have an income tax treaty, then you need to find that form. If we could go into more detail, we would, but that form based on your activity to actually claim or put in your claim to have no taxes withheld under an income tax treaty. So administrators, we have to get the form to allow the exception.
And if you're a pre-award person, again, if you think this is a likely scenario for that PI, you might want to discuss in advance what you're going to do if this opportunity presents itself, and then consider some sort of language in the budget narrative so that you've got something to refer to just in case memories have faded a year later when the grant comes in.
Right. There's a table in its IRS publication 515 that actually lists out the countries that have income tax treaties. They're in the back of the book, and it goes by the different type of activity. Certainly when you look at it, call me up and I'll walk you through it. Many already know it out there.